Hey guys, welcome back to the Hilton True Wealth Podcast. I'm Mark Miller, manager of the Hilton Family Office, and today we'll be discussing why you may be investing wrong. Now, most people aren't investing wrong because they're careless. They're investing wrong because they've never been shown how to invest like the wealthy invest in a much more efficient way. And that's not just my opinion. That's what we see every single day when we talk to prospective clients and we review their portfolios. If you're like most people that are listening today, your portfolio probably looks fine. At least you think it's fine. You've got some stocks, maybe some mutual funds, ETFs. Maybe you've got a retirement account, a 401k that's been doing well and it's made you money. But maybe you even have a financial advisor that's helping you and you're thinking that they're steering you in the proper direction. And on paper, your portfolio may check all the right boxes. It's diversified, it's set for long term, it's balanced. But here's the reality that most people never hear. Just because a portfolio looks good, that doesn't mean it's built to perform the most efficiently and the most effectively. What we actually see is, and just let me tell you a little bit about some real insight here. When clients come to us for the first time, we run generally a risk and wealth assessment where we dive in deep, we get all their details, and we find out kind of what they've been doing. And what shows up over and over again is a pattern. And it's amazing how many times we see this. Heavy exposure to the same types of market risks across their entire portfolio, and they don't even know that. Layers of hidden fees inside funds especially. I've talked about this before in some of the other podcasts that we've done, that most people have no clue. They think they're paying that 0.5% or 1% to the mutual fund company. Well, there's internal and external fees that are actually part of that mutual fund. And actually, you're paying closer to probably 3 to 4% a year. And again, most people don't know this. Little to no tax strategy built into the portfolio. No real connection or what we call synergy between investments and the person's actual life goals. So this is not to say that every portfolio is absolutely bad. You could be making money in your portfolio still, but often what we see is there's no design system. So what's the core problem that we usually find and see? Well, most portfolios are built on a collection of products. And you may have a financial advisor that looks like it's a very cohesive portfolio. And again, I'm not here. I've been in all different parts of the financial industry. I'm not here to attack any specific financial advisors or brokers or anything like that, because they do what they do inside their system. But really, what most investors generally do is just buy different products as time goes by. Hey, that mutual fund looks good, or that looks good, or their broker will come to them or their financial advisor and say, hey, we think this is pretty good. What do you think? Hey, give us your opinion. Oh, that sounds good. And the next thing you know, you've just got a collage of investments and no one has looked at the cohesiveness of those investments. So really, that's not the way the wealthy does it. They think in terms of structure, flow, control, and control is a big thing. Long-term control, being able to have the outcomes without a doubt that they want to have within the next 10, 15, or 20 years. So they're not asking, what should I invest in? They're asking, how should my money behave for me? How should it build wealth for me? And the only way that that can be accomplished is through a systematic approach and an actual process and a structure in a portfolio where everything is working together. So if you buy one investment, how does that investment tie into all the other 10 investments that you have? How is it correlated between the other investments? Meaning, if this investment goes down, are all of them going to go down at the same time? You know, one of the things that we invariably find when we do these assessments, and if you want to come to us, we'd be happy to do this for you complimentary. Probably 9 out of 10 people find they are way too weighted on the equity side. So when something goes wrong in the equity markets, all of a sudden they're down 30, 40, 50% in their portfolio. And that's the last thing that a wealthy investor wants to see. So I also want to talk about, and I'll go a little deeper into this in my next podcast, why diversification falls short in most situations. So you've probably been told that diversification protects you, but diversification, as most people use it, it just means owning a lot of different things that react the same way when the market moves. And they don't know that. Many financial advisors don't even know that on the retail side of the business. So when things go down, everything goes down together, as I mentioned earlier. And that's not any type of proper protection. That's just spread out exposure. And you've heard me talk about this before, and probably our chief investment advisor on the Hilton family office side, Jason Plusinak, you probably heard him talk about this, that first and foremost, there needs to be a degree of protection in the portfolio. Now, what I always say is, if you were to look at your investment portfolio very simply like in a pyramid, well, why have the pyramids withstood the test of time, thousands and thousands of years? Why? It's because they have a safety base. They have such a huge base that the other parts of the pyramid will stay intact even as the years go by, and all the, obviously centuries and weathering and storms, sandstorms, all of that, they've withstood it because they have a solid foundation. Well, the wealthy understand that. I think, and again, I've been in all areas of personal finance over the years. And I used to be kind of a retail advisor. And my feeling is the retail has gone off the rails, so to speak, in the sense that it's so simple and it's so easy how things are structured that that you can't possibly have the level of efficiency and structure that you actually need. So let's talk about how, and I've discussed this in some other podcasts, how the wealthy really think. The wealthiest families, like the Hiltons, like the Rockefellers, and others at this level, they don't rely on the market alone to build or protect wealth. They build systems and processes that, first and foremost, is about protected capital. And then they start thinking about strategic growth. Do they have the proper things in place to get that growth, whatever their goals are for that particular type of portfolio that they're structuring? And I can't emphasize this enough. I've already done some podcasts on this. I'll do a lot more on it. Tax efficiency. Most portfolios we see, and even some very wealthy people that have come to us, their portfolios are not tax efficient at all, but yet their advisors say, hey, they are, because you have some money tax deferred, that's growing tax deferred, or you have some municipal bonds. So we're being very tax efficient here. That's not designing, again, creating systems and designing a really strong structured portfolio that has excellent tax efficiency. Another aspect is providing a predictable income. And if we can, tax-free income. Again, we've talked about this before. We'll talk about it further, about structuring portfolios. The wealthy always do, to where when it comes time to take money, that they're going to take it completely tax-free. So each part of a portfolio has its job, and each part behaves differently to complement the other parts of the portfolio. Again, a total contrast between a regular kind of boring retail portfolio and a portfolio that's done by the smart money folks. And most importantly, They're designed, all of these things are designed to work together. And again, a word we use all the time in the Hilton Family Office is work synergistically. So at Hilton, that's exactly how we approach the planning. We're not just looking at returns. And, returns can be gotten in a lot of different places. We're looking further. We're looking at risk exposure, tax impact, income sustainability, and really long-term control. What kind of control truly do you have on the portfolio? Because real wealth isn't built on performance alone. It's built on structure and systems. A quick story I want to tell you is about a client that came to us that had amassed quite a large sum of money, and on the retail side of the business. And the problem with the portfolio, and even though they've amassed some wealth, they were very confused. They were kind of upset with their advisor. And it wasn't that the advisor did anything terribly wrong, or they did anything terribly wrong. It was just that they had an incoherent portfolio that was really ultimately giving them angst, and they were losing sleep at night. So we did a risk and wealth assessment and found out that client, unbeknownst to them, was 80% exposed to at-risk assets in their portfolio, and they were under the belief that maybe they had 40 or 50% risk exposure. But that's very common. So what we did for them, we did the assessment, and then we showed them our true wealth portfolios that are really kind of designed and based on what we do with the wealthiest of our clients. Safety first, then we start layering in all the other important areas in a portfolio to give them very efficient portfolios. So over the next few episodes with me, I'm going to walk you through exactly how a good system works, kind of step by step. If you want to go deeper right now, you can dive into a complimentary copy of our book, Hilton Wealth. Not a long book. We don't mean it to be real in depth. It will probably only take you an hour or two to read through it, but it gives you an overview and kind of explains the contrast between, again, retail investing and safe money investing that often the smart money does. So that brings us to the end of today's episode of Hilton True Wealth. If you want to learn more about the topics relating to building your wealth, tax planning, cutting edge tech, and family office services, we're here to help you in any way that we possibly can. Be sure to follow us wherever you get your podcasts so you never miss an episode, and give us a like or review. And if you're curious to learn more about your wealth, tune in every Tuesday for new insights and special guests. If you found value in what you heard today, share it with someone who might benefit too. For more insights, resources, and to get a free copy of our book, Hilton Wealth, How to Invest Like an American Dynasty, visit us at hiltonwealth.com. Thanks for joining us. Until next time, keep learning, keep growing, and keep building your true wealth.